Hello guys, let's continue from where we left off on the previous accounting video. So now I decided to also do T accounts for you because I've noticed most of the students don't know how to prepare T accounts. So let me just do them quickly, show you how this double entry system applies. Okay, so remember we said sales. Please make sure you check on the previous video in order to be able to understand what is happening on this one. So sales is going to be debited, cost of sales is going to be credited, debtors control is going to be credited, and then trading stock is going to be debited. And then let's go. Debtors control is going to be credited because now we are deducting the debt, the debts that the debtor is owing, or the credit that the debtor has on us. So which account is going to credit debtors control? It's sales, because we sold on credit. So the debt was because of sales. So that is why it's going to be credited by sales. And then how much? 17,600. And then double entry applies. If debtors control is credited by sales, that means sales should be debited by debtors control. Debtors control. And then how much? 17,600 again. And then now let's move. Cost of sales. Cost of sales is going to be credited, right? Because now it's decreasing. Expenses are decreasing on the credit side. And then which account is going to be crediting cost of sales? It's trading stock, TS 11,000. And then according to double entry system, you know the story. Now trading stock is going to be debited by cost of sales. Cost of sales, how much? 11,000. Just like that. And then don't forget, this is what I always tell my students to do. Please also reflect that those decreases on that decrease and an increase to your assets accounts, at which it's trading stock. Remember, trading stock is you're gonna add 11,000. So just you don't forget on the following transactions that might affect trading stock and debtors control. Then debtors control will deduct 17,600. That is that, especially for assets accounts. All right, let's move now to another transaction. Okay, another one is saying, let me zoom out. This one is saying no entry has been made for stock stolen or insurance. So no entry has been made for stock stolen and also insurance claim at the beginning of March 2020. Outsurance informed the studio that they have paid out. Right, already I think we can be able to now to identify accounts that are going to be affected. Stock is stolen, so trading stock is going to be affected. Trading stock is going to be affected. And then another account is going to be bank because they have paid out the insurance claim. So the money is going to get into our bank account. And then another account we're going to have to figure it out along the way. So 49,500 is in respect of the insurance claim is the one that is paid. So 49,300 is going to go to the bank. Okay, so 49,500, yeah, not 300, 500. Okay, cool. And then the loss will be bared by the business. So Studio LTD bears 25% loss. So now another account has just showed up. It's loss due to theft. It's loss due to theft. That loss due to theft is an expense account, which means it's going to increase on the debit side. Loss due to theft, how much is it? We don't even know, but we know that it's 25%. So if loss due to theft is 25%, the stock without any changes will always be 100%. Anything without any changes, according to accounting, it's 100%, which means now if the loss is 25%, that means the total that was supposed to be covered is 100. So 100 minus 25 is 75. That is being covered. So they've just covered 75%, which means this 49,500 is 75% of the total loss. Okay, of the total damaged, or of the total stolen, not damaged, of the total stolen stock. So we are looking for 25%. And then how much is that? This is, let's work it out on our calculator. 49,500 multiplied by, I need 25, and then I have 75. It's 16,000 16,500. So this 16,500 is loss. Okay, 16,500 is loss. So how much stock in total that was stolen? So we are looking for now 100% out of 75. Okay, or you can just add the two. Okay, it's either you go for the percentage 100, or you can just add these two, this plus this. So let's go for it. 16,500 plus 49,500. In total, it's 66,000. So the total stock that was stolen is worth 66,000. I hope you get that. Now let's go and record. Trading stock is gonna go to balance sheet. Okay, bank is gonna go to balance sheet. Loss due to theft is gonna go for income statement. Do we have something that we haven't took note of? Nah, I don't think so. Now let's go. So loss due to theft is an expense, so it's gonna fall under operating expenses, and then it's loss due to theft. Loss due to theft. And then how much is it? It's gonna be 16,500. So operating expenses, we will add 16,500, and then now it's gonna be current assets. Current assets by which account? By trading stock and bank. So bank is gonna be added by how much? 49,500, and then trading stock is going to be deducted by 66,000. That is that. Now let's go to trading stock. Remember, trading stock we've already added from the previous adjustment. We added 11,000. Now we are deducting 66,000. And then let me show you T accounts. T accounts is your T account for trading stock. DRCR. Trading stock will be credited. Remember, will be credited by deficit, because this is just deficit. Okay, deficits in total, it's 66,000. Okay, and then let me go and check on something. Oh, bank is going to be debited by how much? DR is going to be debited by, remember they paid 49,000. Okay, it's 49,000. Insurance, so insurance is paying 49,500. And then what else? Trading stock. Loss due to theft. Remember, loss due to theft, LDT. DRCR, loss due to theft, is going to be debited. And then so it's trading stock, and then 16,500. So I've written deficit here because this 66,000 is going to be a sum of 49,000, this one covered by insurance, and then also the 16,000 for loss due to theft. So I've just decided to combine the two. There is that. I hope you get it.